So, hi everyone, welcome to my channel Commerce with Chaitanya. I am doing good, and how are you all? Did you practice previous problems? అంటే నేనేవైతే ఫ్రమ్ ద బిగినింగ్ ఈచ్ అండ్ ఎవ్రీ ప్రాబ్లమ్ ఐమ్ సాల్వింగ్ ఆన్ ద బోర్డ్. సో అవి ఎవ్రీ డే ప్రాక్టీస్ చేయండి సో దట్ you can attend your final exams, okay, without any fear, and you can solve your problems without any doubt. Okay, so today in this class I am going to teach you third problem. Okay, third problem of admission of partner. So I don't have, as I told you, I don't have a textbook right now. So shall I read the problem without any late? Okay, is it visible to you? Yeah, this is the third problem in your textbook. Naresh and Ramesh are partners in a firm sharing profit and loss in the ratio of 2:1. Okay, their balance sheet as on 31st March 2019. So, Naresh and Ramesh are the partners, okay, who are sharing their profit and loss in the ratio of 2:1. So, their balance sheet. Coming to the liability side, creditors are 15,000, bills payable 20,000, general reserve 21,000, capital of Naresh and Ramesh 60,000 and 30,000 respectively. Coming to asset side, cash at bank, this is the opening balance of cash 6,000, bills receivable 10,000, debtors 21, and provisions, okay, provision is there 1000, so outer column 20,000. So stock 30,000, investments 35,000, machinery 40,000. So on 1st April 2019, Suresh was admitted into partnership for 1/6 share in profits, okay, future profits of the business. On following terms and conditions, Suresh has joined as a partner. So, Suresh should bring 30,000 as capital. Okay. Suresh capital, new partner's capital is 30,000. Stock to be depreciated by 5%. Machinery valued at 50,000. Okay, value is given. Provision for bad and doubtful debts at the rate of 8% on debtors. Okay. Bills payable need not to be paid. Bills payable is a liability, so which need not to be paid means liability is decreasing. So we should show it in a revaluation credit side. Okay. Suresh should pay 15,000 to Naresh and Ramesh as goodwill privately. Okay. Just to recap our previous class, which is methods of goodwill. So in that I told you, when new partner is giving goodwill privately, no need to show in books of accounts. So there is a no question of goodwill account. Okay, it won't appear and no need to share between the partners. Is giving goodwill outside of the business. So in the books of accounts, okay, we don't show. Okay, now shall I start the problem? Okay, now Naresh and Ramesh share their profit and loss in the ratio of 2:1. So, first we will start with the balance sheet. Okay. In balance sheet, general reserve is there. Undistributed reserve is there, which we need to distribute among the partners, old partners. Then we need to prepare cash at bank. So first one is general reserve account we need to distribute, and goodwill, there is no goodwill. So revaluation account we are going to prepare, and capital, okay, capital accounts of partners. Then coming to balance sheet. So here in this problem we are going to prepare 1, 2, 3, 4, 5. Only 5 accounts we are going to prepare. 4 accounts and 1 is balance sheet. Okay. So general reserve first I am going to prepare. Put the heading general reserve. Write debit and credit, particulars amount, particulars. So general reserve is in left side, so write in the opposite side, that means right side. By balance brought down, Okay, what is the amount of general reserve? 21,000. Okay, 21,000. So now this amount we need to distribute among names Naresh and to Ramesh. Capital account. So Naresh account. So in the ratio of 2:1 means 2 by 3. 1, 2, 3. 14,000 is the Naresh, okay, share in general reserve. So 14,000, as I told you, deduct 14,000 from 21,000 so that you will get second partner's share. So 7,000 is the second partner's share in general reserve. Just close the account. 21,000 and 21,000, two sides. Okay, this is the general reserve. Next, coming to the cash account. Particulars amount. This is the debit side and this is the credit side. So, what is the opening cash to balance brought down? 6,000. 6,000 is the opening balance, which is on the right side. Now I posted it on left side. Otherwise, go through the journal entries. Okay. Next, so this is the opening balance of cash. Now we need to find out closing balance. Okay. So by entering this capital, Suresh should bring capital 30,000 as capital. What is the journal entry for capital? Cash account debtor to capital. Capital is coming into the business. So cash account debtor to new partner name is Suresh. So Suresh capital account. Suresh capital account, which is 30,000. So there is no entry for goodwill because the goodwill is given by, privately by new partner. So close the account. $36,000. So two sides. There is no entry in credit side. So I simply write down by balance carry down 36,000. Okay. To balance brought down 36,000. 36,000 is the closing balance. So this is the cash account. Now coming to revaluation account. So I'll prepare revaluation account here. So particulars amount. Put the heading revaluation account. This is the debit side and credit side. So coming to the adjustments, stock. Okay, stock to be depreciated by 5%. So depreciation, always depreciations, okay, write in the debit side and appreciations in credit side. Okay, I told you asset decrease, debit side, liability increase, debit side. And here asset increase and liability decrease. So credit side. This is a nominal account, you know that. So depreciation on stock. Depreciation on stock. Stock value is 30,000. On that 5%. Okay, so stock is okay depreciated by 5%. Simply these two zeros. Okay, 1500 is the depreciation on stock. Next, machinery valued at 50,000. So what is the value of machinery here? 45,000. So here machinery value is appreciated. So increased. Appreciation. Okay, machinery is an asset. Asset is increased. So write down credit side by appreciation on machinery. So the difference, you should write the difference, not the values. Okay, that values you should show in a balance sheet. So most of the students, they do mistake here. 50,000, so they write 50,000. Completely problem goes wrong and your balance sheet did not get tallied. So don't do such mistakes, only the difference you need to write. Next, coming to provision for bad debts. Okay, provision for bad debts, I am writing in a short form, 8% on debtors. So what is the value of debtors? 21,000. 21,000 and minus 1,000 is a provision. So already provision is there 1,000. Okay, so total provision is 8%. So 8 by 100, 0 0 0 0 cancel. 210 into 8, 1680. So 1680 is the total provision for bad debts. Out of 1680 already provision is there. Okay, 1000 rupees. So deduct this. 680 is the remaining provision for bad debts. So this 680 you should show in a revaluation account. 680. 680 is the provision for bad debts. Why? Because already provision is given in the balance sheet. Next, bills payable need not to be paid. Bills payable is a liability. So 2,000 need not to be paid means your the liability is decreasing. Liability is decreasing. So show it in a credit side. Bills payable need not to be paid. Okay, bills payable. Just to write down bills payable. Okay, need not to be paid is 2,000. Is there anything else? No. We have posted all adjustments. So now make the totals. Now this is a 7,000 and here 2,180. So 7,000 is the highest amount. So write down two sides. Now the remaining balance we need to distribute among old partners in old ratio. So 7,000 minus 2180. This is 2. This is 7. Sorry, this is the 8. 8, 4. 4820 is the revaluation profit which we need to distribute among old partners. So in the ratio of 2 by 3. So first we'll multiply these two. 4820 into 2. 16. 9640. So 9640. I'm multiplying these two first. 9640 by 3. 3 ones are 3 threes are. Okay. 3213. 3213 is the Naresh. Okay. Naresh capital. Okay. Next, coming to Ramesh account. Ramesh capital account. This is Naresh capital account. This is the share of Naresh, 3213. So simply deduct from 4820 3213. So you will get the answer 7061. 1607 is the second one. So point point. Okay. 1607 is Ramesh share in revaluation account. So this is the revaluation account. Next we are going to prepare capital accounts of three partners. Okay, so we are preparing capital accounts of Naresh, Ramesh and capital accounts of Naresh, Ramesh and Suresh. So this is a capital account. So first we need to post capitals of old partners. So capitals of old partners is in a left side. We need to post it in a opposite side. So by balance brought down. What is the amount? 60,000 and 30,000 is the old partner's capital. And what about new partner Suresh? So 30,000 is the Suresh capital. 30,000 is the Suresh new capital. Okay, cash account. Next, adjustment, capital adjustments. First, we need to distribute general reserve among old partners by general reserve. General reserve is in a left side, so post in a opposite side. Otherwise, just to remind the journal entry. Okay, journal entry. What is the journal entry for distributing journal reserve? Journal reserve account data to Naresh capital and Ramesh capital. So we are crediting both capitals. So write down general reserve. So 14,000 and 7,000 is the general reserve. And coming to closing balance of cash is an asset, so which we need to post in a asset side. So coming to the revaluation account, by revaluation account. So what is the amount? 32131607 is the revaluation profit of both the partners. So still, is there anything else? No. We need to close the account. First, to write down new partners, capitals, two sides. Then coming to the Ramesh, 30,000, 37, 38, 607. 38, 607 is the Ramesh capital, adjusted capital. 38,607, which we need to post in the liability side. 60, 74, 75, 76, 77, 77, 213 is the Naresh adjusted capital. 77, 213. Okay. So there is nothing to post in a debit side. So simply write down balance carry down. Which balance? These amounts. Adjusted capitals 77, 213, 38, 607, 30,000. Okay. So brought down to by balance brought down 77, 213, 38, 607 and 30,000. Okay. So this is the capital account. So next we are going to prepare balance sheet finally. Okay. I will rub this cash path 36,000. Remember, cash account is 36,000. Okay. So now finally we are going to prepare balance sheet. Okay. Format for balance sheet. Balance sheet is not a account. Balance sheet. Put the heading balance sheet. This is not an account. So we don't write debit and credit. So liabilities, amount, assets, amount. Now, coming to the liability side, we'll post liabilities. Okay, creditors. So, creditors 15,000. Just to post the 15,000. And coming to bills payable, there is a adjustment for bills payable. So, bills payable is a 20,000. Bills payable 20,000. So there is a adjustment. Bills payable need not to be paid. 2,000 need not to be paid means should deduct. Okay, 2,000. So only you need to pay 18,000 out of 20. Only 18,000 need to pay. Next, write down capitals. Capitals of Naresh first, then Ramesh, then Suresh. This amounts, okay, adjusted capitals we need to write to, okay, 77 213 38 607. Next, 30,000. These are the capitals, okay, capitals of Naresh, Ramesh and Suresh. Coming to the asset side, what is the cash? What is the closing balance of cash? 6,030 means 36,000. Okay. Now bills receivable. Bills receivable is 10,000. Next, debtors. So debtors, inner column write down 21,000. So here they deducted 1,000, add 680 also, total 1680. So you will get 19,320. Yes, 19,320, and this is 21,000. Yes, 680 and 320. 19,320 is the debtors. Coming to the stock. Stock. What is the value of stock? 30,000. Stock to be depreciated by 5%. So stock depreciation is 1,500. So 28,500. 29,30. Okay. Then investments. Investments 35,000. Is there any adjustment? No. 35,000. Next, write down machinery. Machinery is appreciated by 5%. So 45,000 plus appreciation 5,000. So write down 50,000 in a outer column. So the value of machine is, so we don't have sufficient place, so I rub the capital accounts heading. Okay. Now make the totals. So this is the machinery. First, machinery purchased at 45,000. So the value is increased by 5,000. So 50,000 is the machine value. So now, okay, make the totals and type in a comment box quickly. Okay. Meanwhile, I'll calculate. 15,000, 18, 20, 32,000, 33,000. 33,000 is the, okay, I'm adding 2, so 60, 68, 68, 607, 77, 213. So I'm not writing each and every value like Kirana Saman list. Okay, I'm adding two values. 10, 10, 2, 6, 7, 8, 10, 18, 10, 17. 1,78,820. 1,78,800. So 1,78,820 is the liability side. So we'll see on asset side. Okay, 46,000. Yes, yeah, 46,000. Now, okay, this is a little bit difficult me to add. So I will add these two and these two. Okay, 35,000, uh, 50, 50, 63, 63, 500, 63, 500. These two I am adding. Then these two. 50, 69, 320. 50, 69, 320. 2, 5, 8, 9, 10, 16, 17, 18, 6, okay, 10, 17. 1,78,000, yes, 1,78,820. So our, okay, balance sheet got tallied. So I'm happy. Are you? So I'll add these two and these two and these two for easy calculation. Okay. Don't think that why ma'am added only these two amounts and these two. Okay. For easy calculation, I'll add. So this is the third problem. Successfully we have done third problem. So I hope you like this video. Thanks for watching my video and subscribe to my channel for more videos. Thank you.